This program is brought to you by the Kentucky Small Business Development Center in Louisville. We provide the professional expertise, tools, and resources to help you succeed. To connect with a business coach, call 502-625-0123 or email sbdcinfo@uky.edu.
Welcome, everybody. I'm Dave Atkin. I'm the director here in the Louisville Center of the Kentucky Small Business Development Center Network. Glad you've joined us today. It's another Toolkit Tuesday, and I hope you're having a great Tuesday. As always, if you wouldn't mind, just look to the bottom of your screen. There you'll find the chat feature, and just a test to make sure everything's working well. And you can see and hear us. Just go ahead and press that chat button. And put your name in there. Let us know where you're joining us, where in the universe you're joining us from. It's always great to see where people join. We get folks from all over the world sometimes. So if you wouldn't mind, just so I know, just so I don't worry, because I'm a worrier, just pop that into the chat. Say hello. Let's see who we got here. There's Janet. And Herson from Louisville, good to see you. Rick C. in Louisville. Stacy. There's Claire. Hi, Claire. Deidre. Frankfurt. Awesome. Glad everybody can join us today. So as we go through today, if you have any questions or comments for our presenter, just go ahead and put them in the chat and we'll get to them at the end. So we've got actually a great resource today. We've got Will Finster from Capital Access Corporation. They are the #1 SBA 504 lender here in the state. And I don't know if you've ever thought about looking into a 504 loan program, but it is a spectacular way to really boost your business, by buying assets and other things. So Will, are you there?
I am, David. Yes, sir.
All right. Glad to see you today. Thanks for joining us.
Absolutely. Thank you so much for the invitation, you all. Can't thank you enough.
So, Will, I'm going to put your slides up here, and I think we should just jump on in here.
Wonderful.
All right, Janet, how are we looking?
Good to go.
Okay. All right, Will, welcome. I'm just going to turn it right over to you. Let's look at 504 loan programs so everybody is ready to go.
Wonderful. Thanks, Dave. And thanks to all of you. Janet, I really appreciate your help in getting this all conducted. And to all of you in the presentation today. Hopefully this will certainly give you all some enlightening information, really give you a little more power in trying to negotiate or locate new avenues of financing while working with the SBA 504 loan program. David or Janet, would you mind just hopping one slide forward so I'm just not repeating myself? Okay, excellent. So we can just go right back to the very first one. I will try to just kind of give a basic background of Capital Access Corporation, who we are, and then we'll dive right into the specifics of the loan program. But again, thanks you all for being here on Toolkit Tuesday. Dave, you, Janet, and the SBDC do a great service to our Louisville community and all SBDCs throughout the entire state of Kentucky. So thank you again. Capital Access Corporation Kentucky, we are a private nonprofit entity, all right? We are what is called a Certified Development Company, and that is a CDC you will hear me refer to along the presentation today. We are, in essence, a delegate by the United States Small Business Administration, all right? We are certified by them to provide this very specific loan program, which is, of course, the SBA 504 loan program. As that private nonprofit entity, we partner with banks. We partner with credit unions, financial institutions, in order to provide you, the business owner or startup business, for that matter, to gain access of upwards of 90% total project financing for your business needs. All right, so that is a huge, huge influx of capital to help out with whatever projects you may be working on and that may be eligible for 504 financing. All right. So there are about 200 certified development companies or CDCs throughout the entire U.S., and we all adhere to the exact same protocol, best practices, and standard operating procedures. So anywhere you go, it's pretty much the same it is the same program. All right. I would like to toot our own horn and say that we really specialize in our service quality in respect to the clients and the banking partners that we have established and nurtured and cultivated throughout the 24 years of our existence. 1998, as a matter of fact, was our inception. The 504 itself has been around since the 1980s. That is when, at that time, interest rates were skyrocketing in the 20s. As well as for both business and residential. Banks were getting really hit left and right with businesses that were just completely underwater on interest rates, and they could not borrow, and nor could they afford at that point. So at that time, in the early 80s, Congress, being, the try to do a laissez-faire approach and stay out of the capital market and businesses and leave them to themselves, they saw a major need to try to intervene and help in any way humanly possible by taking some of the risk off of the bank and taking some of that on the federal side. So be that as it may, in the early 1980s, House Bill HB 504 was passed. And there we have it. Let's go on ahead into the specifics. Dave or Shannon, if you want to go on ahead and move on to the next slide here, we'll get the basic breakdown of the 504. All right, the 504 loan program. Again, what the 504 can do for you all, the small business community, based on fixed asset interest rates, fixed interest rates. We have 3 loan terms, all right, that you see here, the 10, the 20, and the 25, and as low as 10% borrower equity into the deal. So I'm going to, we'll get into it a little bit further as you can see, as little as 10% equity into the deal and fixed interest rates. That is where we've got a very good niche in the market. All right. We're not eligible to not every business is going to be eligible for 504 financing, but when you do find yourself eligible for it, it really can help out in a tremendous way because our loans are fully fixed, fully amortized for either the 10, the 20, or the 25-year term. Fully fixed for the entire duration of those terms. You cannot find those by conventional means. All right? Let's go on ahead and move over to the next slide if you all don't mind, please. Thank you very much. So the purpose of the 504 is to assist healthy, growing small businesses by participating with lending institutions, again, to provide fixed-rate long-term financing on fixed assets and to provide that long-term fixed asset financing to you eligible and healthy small businesses at a reasonable rate. All right. On to the next one, please, Dave. Thank you. All right. So again, Capital Access will provide access to the 504 loan program ourselves. All right. Again, this is a partnership breakup that we work with the banks hand in hand. And at the end of the day, when we close our loan, the bank will close their loan and, in essence, wipe their hands clean of the SBA, and we service our portion of the loan for the 10, 20, or 25-year duration. All right? So you've got a face to the name here in the state of Kentucky. And our geographic territory is the entire Commonwealth of Kentucky, as well as southern Indiana counties of Washington, Floyd, Clark, and Harrison. So really that makes up pretty much the Louisville MSA area. All right. So next slide, please. All right. So eligible businesses here, you all. All right. Project needs to be located in our territory. There is a caveat here, however. There are certain circumstances where we, Capital Access, can encroach upon areas outside of our typical operation. All right. What is simply done, and we try to be as good of partners, business partners with our counterparts, CDCs throughout the rest of the state and around the surrounding regional areas. But we have been able to, with their permission, all we need to do is reach out with basic business specifics, and we reach out to those partnering or those other CDCs in those respective states, wherever your project may be, if you would like to work with us there. All right. Once we get approval from each of the CDCs in those states, we can continue on. But we have dealt with deals in, I believe, Illinois as well as Tennessee. So let's move on from there. But nevertheless, yes, we can still operate outside of our area of operation. Businesses must be for profit. All right. We do not deal with a lot of businesses, any businesses that are nonprofit first and foremost, nor can they be investment properties or speculative businesses. They must be going to the end user. All right. So owner-occupied businesses. Businesses' net worth cannot exceed $15 million, nor can the average income for the last 2 years exceed $8.5 million. I know, we all wish we could be there today, but maybe one day you will get there. But at least for the most part, this program can be geared towards most every business that comes to us. All right. Initial owner occupancy standards. Let me explain this. All right. So we do run this program for businesses that are going to occupy that real estate of which we are going to help finance. All right. So if you've got a business, you are looking to acquire perhaps some real estate. All right. You must occupy existing real estate. You must occupy 51% of that real estate. You can lease out the remaining 49% to help with any kind of cash flow. All right. So that is a very nice piece of the 504 to be able to use. All right, to help with that cash flow if you are not going to be occupying the entirety of that real estate. That is existing real estate when we're dealing with it. If you are doing ground up construction, which we can help finance as well, you've got to occupy 60% for new construction and lease out the remaining 40% for, again, any kind of cash flow needs. All right. Next slide, please, you all. All right, here we go. So how much can we usually deal with in terms of project sizes? Now, project size with everybody involved, the banks, credit unions, whomever, us at Capital Access, as well as you, the client, can be as little as $100,000, all right, all the way to multi-million-dollar projects. So really this can cater to many, if not all, businesses that are out there, all right? Don't really deal with the microloan side ourselves. Again, this is based on fixed asset financing. So with Capital Access's amount of the deal is as little as $50,000 up to $5 million in most cases, in most industries. Manufacturers we like to see, as well as green businesses, and I can explain a little further on a case-by-case basis, but environmental friendly, kind of lead like buildings for real estate and things like that you can do some savings on energy costs, are entitled up to $5.5 million on these cases. All right. Next slide, please. All right. So typically what we do, you all, in our partnership, all right, with the bank as well as you all, what we typically look at is what's called a 50-40-10 split. What does that mean? That means typically the bank is going to be providing upwards of 50% of the total financing projects. Okay, they are going to maintain first position on all the collateral. All right. and they get to determine their own terms and their own rates. It is up to their discretion. We do not intervene in that. All right, so it's a very good deal for the partnering bank because they get a first position on all the collateral, but 50% loan to value on their portfolios. So that position typically frees them up to offer more appealing and attractive interest rates and terms when partnering with a 504 loan. All right, we will come in and subordinate to those folks of up to 40% of the total project financing. All right. And again, I reiterate that 40% is locked for a fully fixed, fully amortized loan term of either 10, 20, or 25 years. So where the bank's interest rate can change and their terms can change, rest assured that you can offset your interest rate risk by locking up to 40% of our portion to a fully fixed, fully amortized loan. So that is very nice. That is very nice. Leaving as little as 10% equity into the deal for you guys. All right. Conventionally speaking, that's unheard of these days, especially, but really helps out to keep as much or as little out-of-pocket costs for you. So this is, again, a big benefit in these ways. What you see here is on the screen is pertaining to public policy goals. As I tell you the breakdown of the 50-40-10 split, the 40% that we lend, we subordinate to the bank, to that partnering bank, who is in a very good financial position at first position of the collateral. All right? We subordinate to them, and while the SBA 504 loan program is a financial tool, a very crucial financial tool, it's also an economic development tool. We typically lend on a job creation basis, all right? That means that we will typically lend upwards of $85,000 for every one full-time or two part-time jobs to be created by your company over the next 24 months or 2 years after funding, all right? So we're in this game to make sure that, the community grows, the capital investment grows, as well as the job creation. And that is what we like to see. Typically, that is what we need to see in most cases. And again, this is a case-by-case basis. There are ways of circumventing those job creation rules, and that is right there in front of you in terms of the SBA public policy goals. So, if you can hit any one of these criteria, you can waive the job creation standard, okay, on our portion. So you can gain access to the 504 funds without having to create those jobs. One, obviously, is in rural counties. If you are located, your business that is located within a rural county of 50,000 or less, a business district revitalization or hub zone as well, SBA hub zones. Those are not unlike enterprise zones, if some of you all are familiar with that term. Expansion of exports, as well as minority, women, and veteran-owned business of 51% or greater. You may be a male Caucasian-owned business out there in the audience right now, but you could be a veteran as well. You may be a veteran as well, and worried about the job creation standards. So nevertheless, if any of you all hit these criteria, you do not need to worry about job creation. All right? Let's move on to the next slide, please. All right, thank you. Again, this is pretty much just the basic breakdown of what I had mentioned. All right, the typical 504 project is broken down in 50, 40, 10. All right. We do ask the lender that when they do partner with us, that they commit to you, the small business owner, of at least 7 years on our 10-year, or commit to you for 10 years on our 20 or 25-year terms. All right, so I don't mean to confuse you, but hopefully that is spelled out enough. That's really something that we deal with our partnering banks with anyway on our end, so you don't have to worry about that. But nevertheless, look at the breakdown here. 50% would be coming from the bank at $500,000 or $400,000 coming from Capital Access, as well as the borrower's injection as little as $100,000. All right, so that's a big, big savings on your all's portion. Let's go on ahead and move to the next slide, please. Okay, again, I reiterate here, this is just the lender's side, okay? That, again, if the SBA loan is 20 or 25 years, the bank loan must be at least a 10-year term commitment, all right? They are certainly free to do 5-year adjustable rates. With a balloon payments are certainly allowed, and rate negotiations are certainly between you as well as the bank. Okay, next slide, please. So the advantages, again, to the lending institution, if we've got any bankers on this call this morning, you all would maintain first position on all the collateral at 50% LTV. So it really helps out the improved cash flow for the bank standpoint. And they get CRA credit, Community Reinvestment Act, when working with the 504. Again, this is really pertaining only to the bank. And Capital Access Corporation works hand in hand with the partnering lender. So that helps as well. Again, we're here in the state of Kentucky, so the lender, not only you all, but the lender will also have a face to the name and will work with us directly. Next slide, please. Excuse me. All right, so advantages to you folks. Really, you all can conserve your working capital with only 10% down. In a lot of cases, conventionally speaking, and depending on what type of industry you are, you could be required 20, 25, even 30% right off the bat in coming in conventionally with those kind of financing needs. Again, offset your interest rate risk by having 40% of all the project costs tied to a fixed rate with 504. And the extended amortization provides much lower monthly payments for you guys. And with that improved collateral position for the bank, as I mentioned a moment ago, would open up their ability to more lending capacity as well as lower rates. So that's a case-by-case basis. Next slide, please. All right, so let's chat a little bit about our interest rates, how ours is set. These are, while we are a federal financial program, these are not tax-subsidized dollars. These are actual investors' dollars. I mentioned early on at the beginning of the presentation that this is there are about 200 CDCs like us throughout the entire U.S., and we all adhere to the same calendar. And once a month on a given day, on a specific day, we bundle all of our loans nationwide. All CDCs bundle all of our projects, including your projects, and sell them on the open market, okay, to insurance corporations, pension funds, as well as interest firms, all right? They buy your project, all right, in essence, and they set it at what is the 10-year Treasury bill is what we really focus our lending capacity on with some fee structures that are tied to it, all right? And I'm going to get into the fees a little bit later, how those are calculated as well. So in essence, you all, you would be, when working with an SBA 504 loan program and us, a Capital Access Corporation, when it comes down to closing, you all would be closing and signing on a blank note. All right? In essence. What we can do for you as Capital Access and a CDC, we can tell you what those established rates had been on a month-to-month basis, and we can date it back up to 5 years. All right? So when you do sign on that blank note, we have to wait about 4 to 6 weeks after closing when those interest rates are going to be set, when those bond investors buy into, as I had mentioned, buy into your project. And that's to the tune of about $375 million a month on the open market that are sold with your projects in mind. All right. So these are actual investors that are purchasing into your business. All right. Again, typically at lower rates than conventional, and they are fixed for the entire life of the loan. So those rates, I'm going to tell you right now, today, are as low as 5% fixed for 25 years. All right. It is substantial savings. I know interest rates have gone up, quite a bit in the last few months with unforeseen things happening. Obviously, world wars and inflation certainly don't help the bottom line. I understand it, but nevertheless, at 5% for 25 years, you guys are sitting in a really good position there. All right. So yeah, we can move on to the next slide, please. Okay, prepayment penalties. All right, so again, as I had mentioned, these are investors' dollars. So those investors do expect a return on that investment. All right, so really it's effective for the first half of each loan. All right, so about year 10, once year 11 of a 20-year term comes around, you guys can pay off at any time without incurring any penalty, as well as year 6 of a 10-year term. And it goes for the same for the 25-year as well. So really how it goes, you all, it's relatively steep, that if you all wish to pay off your bond entirely, your loan entirely within the first year, you would be responsible for the first year's principal payment, but upwards of 10 years worth of interest. Okay, so yeah, it's up there a little bit. But again, the type of interest rate that you will have, as well as a fixed term, you would typically pay off the banks before you're going to be paying off ours. So you would just pay off that third party or whoever the bank is that we'd be partnering with, that you're partnering with, and just let ours ride up until year 11 or year 6 of the 20 or 10-year term. That, as you can see, that interest rate or that note rate will decrease. That penalty will decrease 10% every year for the first 10 years, as well as 20% every year for the first 5 years on the 10-year note. All right. We can certainly get into the weeds a little bit more as the Q&A comes on at the end of the presentation. So I know that can be typically confusing sometimes, but nevertheless, that is where we are right there on the prepayment penalty side. And again, this only is attributed to the SBA 504 portion of the total project. All right, the bank may or may not even have a prepayment penalty established on their side. So please note that this is only tied to the SBA 504 or our portion of the loan. All right, next slide, please. All right, additional program specifics. These are personal resource test implemented. This is actually that is actually old, so I won't even comment on that. We don't deal with this anymore, at least on our side for these purposes. The typical breakdown of a 504, as I had mentioned, is a basic 50-40-10 split. There are certain circumstances, of which there are 2 right here, that you may be required to bring more to the table. All right, thus increasing the equity position and thus decreasing the 504 position, or even the banks. We can massage and change up the breakdown of this on a case-by-case basis. But rest assured, a 50-40-10 is usually what we're dealing with. But if we have a business, if your business is a startup, and startup would be constituted as less than 2 years old. All right, less than 2 years old, don't have a whole lot track record. And just like with the bank, we would require a little bit more equity into the deal at 5% for startup businesses, again, less than 2 years old. And single-purpose facilities require additional 5% equity injection. So what are those single-purpose facilities? If you have or own a hotel, a gas station, a car wash, something that, heaven forbid, happened to your business could not be easily converted to something else as a typical general retail or warehouse or just office complex could be easily converted to something. If you've got one of those special use facilities, that would require an additional 5% equity injection to the deal. Now, you may hit one of those, you may hit two of those, but rest assured, the maximum that you, the client, would bring to the table is 20%. That is if you hit both you're a single purpose use facility as well as a startup. All right? But again, being in that position, 20% is still quite a good deal. All right? I believe this should be the last slide, but I know that there's probably going to hopefully be some good questions here. But I do want to reiterate how we do this partnership with the banks, with the credit unions, with any kind of financial group that is going to be coming on and partnering with us, all right? We want to make this as seamless as possible and as convenient as possible for you folks as well as the bank, all right? So I just want you all to know that we work with any bank, any credit union that you have a relationship with or even need to garner a relationship with. If you don't have a bank, we can help you find one and locate one. We've garnered a lot of relationships with banks throughout the Commonwealth and Southern Indiana in the last 24 years. So we can certainly find you someone that can help out. But nevertheless, I want to state that because you shouldn't feel as though you can't do a 504 because the bank says, no, we're not going to do a 504. That's why it's important for you to get this type of information, because if the bank you're working with currently does not wish to participate in a 504, which is fine, but you really like what you hear, you can take that, you can take your project and say, bye-bye, we're going to another bank who will partner with Capital Access in the 504 in order to get you those long-term, fully fixed, fully amortized loan terms, all right? So they don't need to be a preferred or a certified lender or anything like that. But folks, Dave, Janet, if you want to move on to the next, I believe it's just my contact information. There we are. All right. As you can see, we're located at 401 West Main Street. That is right smack on the corner of 4th and Main, downtown Louisville. We're in the Truist building. Some of you all may know as the old BB&T, right next to the Gold House Hotel. Dave, Janet, audience, thank you. We are a phone call away. I just want you to know, all right? Wherever your deal may be, if it is here in Louisville or if it is in Southern Indiana or anywhere in the Commonwealth that you are from at this moment, we can help you folks, all right? But again, we love to pride ourselves on our service quality. We're a small organization, but we cover a lot of ground, and we really like to say, we have been for the last about 22 out of 24 years the #1 504 lender for the state of Kentucky. So, we worked very hard for it, and we would love to work very hard for you folks. So, Dave, Janet, you all take it away, and I'll be happy to answer any questions that you all might have had over the last half hour.
Thank you, Will. That was great.
You bet.
I do have a couple questions. So this is a little bit complicated, but when you were talking about the bond sale and you're basically signing a loan document without a fixed rate until the bonds are sold, how does that square up with the bank? So let's say you're buying a piece of real estate and there's a closing. How do you make that work with the seller of the real estate so that they don't walk away from
Okay. So yes. Hopefully this can answer, but and please tell me if I'm interpreting it wrong. But hopefully this can answer a little bit how that partnership works exactly from a timeline standpoint. All right. So we don't pre-approve deals. We can't get an approval right off the bat upon application. All right. So we partner with the banks and we work with them and you, the clients, hand in hand. Hell, and Dave and Janet with the SBDC as well, hand in hand, all right, until we get to both closing tables. However, the 504 cannot be put in place and funding cannot be put into place until such time as some of our items for closing are in place. Those can be insurance related, to make sure that you are fully insured before we can close for your property, personal property or real estate and hazard insurance, workers' comp, as well as sometimes there are life insurance policy requirements that we do, request that we do ask you as the client to have on hand made out to Capital Access. Again, this is a case-by-case basis, so I don't want to muddy the waters. But at the end of the day, there are some items that we have to have in place before we can close. That's the bottom line. And with that, the bank, once we get a completed loan application from you all, which we do have on our website, and that is actually not on the screen. So if you all want to jot down at least our website is www.cac-ky.org. Again, www.cac-ky.org. All right, we've got a loan application on that website. It's a downloadable, fillable PDF. All right, and around page 910 on that application is a checklist of all the items that we at Capital Access will need to get the underwriting taken care of in order to take these deals to the SBA for final approval. All right, so that's how we kind of work. All right, we work hand in hand with the bank in order to get the exact same information that they're going to be requiring, and pretty much they do require everything that we at Capital Access will require as well: tax returns, personal and business plan, projections, credit reports, all those kind of things to get the typical bank loan underwritten. All right. So once we get all those items in hand, we underwrite them in office and we finalize it and we send it to the SBA for final approval. All right. Once we get that final approval, you all, that goes to, it's an actual called a loan authorization, SBA 504 loan authorization, and it spells everything out from start to finish that you all will be responsible for, as well as the third-party lender or the bank that we're going to be working with. So that letter, that authorization goes directly to the bank, and the bank, as a matter of fact, going to close on their portion as well as our portion during an interim period. All right? So you will be paying probably interest only on the bank's portion or that they're covering for the interim piece. So hopefully this kind of answers, that kind of question, where the interest rate is set, how can you lock in on the real estate itself if the interest rate is not set for another 4 to 6 weeks after funding. So rest assured, once you get that loan authorization, you can close on the deal and you can get the dirt moving. Okay, get the renovations already underway, everything, because the bank is providing upwards of 90% during that phase. During that phase, until we can get the insurances in place, a certificate of occupancy perhaps in place. All right, and during that period, you all, we can keep you apprised of what the month-to-month interest rates have been for our loan term. All right? So at that time, hopefully, once we hit the loan closing table, you all will have a good idea of where the markets are, what the interest rate is currently, what we predict it may go, as well as what it has been the last 2 years. The interest rate for the 504 does not fluctuate if you all follow the 10-year Treasury. So it does not fluctuate very often with, obviously, the circumstances of the 2022 inflation that we're suffering, unfortunately, and coming out of COVID as well. So these are, obviously factors we can't can't come up with, but nevertheless, we first try to have to deal with the best way we can. So again, David, do you think that kind of satisfied the answer, or am I totally off base here?
No, that was fine. That was good, really, actually, because I've often wondered that myself. Another question, just to clarify, and you were mentioning about the payoff on like year 6 and year 11. Is that the only year you can prepay everything, or can like
you can pay it off anytime. You can pay it off anytime. Year 6 and year 11 are simply the halfway points. So anytime before that, you would suffer the prepayment penalty, albeit at a smaller scale. You know, if you pay it off at year 8 of the halfway point, okay? Or you can pay it off after year 11. My point was being that at year 6 or year 11, anytime beyond that, you can pay it off without incurring any penalty. It's just before those two midway points, you would be responsible for some of the prepayment penalties.
Gotcha.
Yeah, sorry, that was a little. Yeah.
Ricky wants to know, is this funding only for purchasing real estate for my business, or is there funding available to help with capital for equipment purchases and hiring new employees?
Okay, all right, great question. Great question. So the 504 is very comprehensive, all right? But there are certain areas that we do not help with, and that is working capital, what you just mentioned, what Ricky had just mentioned, as well as startup costs, any kind of inventory, accounts receivables, any kind of training or hiring dollars. These are fixed asset dollars that are going to be going straight towards the real estate and or machinery and equipment. All right, so FF&E as well. And it's comprehensive, and I guess I need to alter my slides or at least update them to include how comprehensive this project is. So within that overall 100% of the total project financing, that can cover acquisition of an already existing facility for your business. It can cover renovations, expansion, physical footprint expansion, and any kind of rehab to that asset. All right. It can cover ground up construction of a brand new facility on an empty plot. It can cover all soft costs and professional fees that come up, with electric, plumbing, anything like that. Build outs. We can cover the costs or reimbursement for appraisal expense, environmentals, phases 1 or 2, if we get to that point. It can cover your moving expenses if you're relocating from point A to point B, architectural, engineering fees, things like that. And again, sometimes, as I had mentioned, we've got a 10, a 20, and a 25-year term. That 10-year term, you all, usually approximates about 2% of our portfolio, which goes towards strictly equipment purchase, machinery and equipment. And you all, that machinery and equipment usually, always has to have a useful lifespan of that 10-year period or longer, all right? So we're not dealing with a lot of rolling stock, not dealing with a lot of, software, things like that just by itself, but more like heavy industrial manufacturing type of equipment, all right? And the rest of it, the 20 and the 25-year, goes to that real estate aspect of it. And that real estate aspect, you all, can go towards machinery and equipment, smaller portion of machinery and equipment and FF&E that goes into the overall project. So hopefully that helped with that question, Dave.
Okay, yeah, perfect. That's great. Looks like that's all the questions we have.
All right.
Any last thoughts, Will, that you'd like to share with everybody? This has been really good. This has been really informative.
Well, you all, yeah. I mean, again, this project is not always, at the forethought of some of your partnering lenders. All right, and that's not saying, and that's not belittling in any way, because we've got a lot of banks in Louisville. All right, and sometimes just maybe the banker that you are dealing with currently or down the road is not even aware of the SBA 504 loan program. The SBA 504 loan program is just one of a multitude of different SBA programs that are out there. We've only spoken today on the 504. There are other programs out there that do that are bank loans with a government guarantee or an SBA guarantee on their side. So we're only focused strictly on the SBA 504 here. So again, it's quite a good tool to use, and especially you as the end user. You can use this as a competitive tool because you might be able to shop around from bank to bank and say, I'd like to use this SBA 504 loan program that can get the bank's collateral position in a very good collateral position as first position. And that bank may say, well, yeah, that's pretty solid, and we might be able to be open for more, for better and more appealing interest rates and terms by partnering with the 504. So again, this can be quite a game changer for you folks. And at the end of the day, you got to look at that fully fixed, fully amortized loan term up to 25 years that you can lock in with 504 assistance, where just other partnering banks or other banks, regional, local, community banks out there just can't offer. So it's just something, a nice tool to have in your tool belt, a great utility, and a great competitive tool. But it's certainly going to help you at the end of the day, provided you guys are eligible for the financing. But just call us. Just call us. We are here in Louisville. You know where we are. There on the screen. That's the most we can ask for. Just call us, see if you're eligible, see if we can go forward on a case-by-case basis. But that's about it, Dave. Janet, thank you. Thank you very much.
Thank you. Will, you guys are a great resource. We really applaud what you do, and you've made a big impact here on the community in the state. So thanks for doing what you do, and thanks for sharing today too, Will.
You bet. Anytime, you all. Seriously, it's been a treat.
Okay. Well, thanks everybody for joining us for another Toolkit Tuesday, and then we will see you guys on another Tuesday. So enjoy your day, and we'll talk to you guys soon.
Thanks, everyone.